Hi everyone. So today in this session, we are going to start with another model in the advanced capital budgeting area, and this concept will be called as decision tree approach in capital budgeting. So in the previous sessions, first we completed the concept of replacement cycle in capital budgeting. Next area we have completed the area or concept relating to the inflation in capital budgeting. So inflation in capital budgeting we have done one problem, and I explained you entire thing regarding the PV factors and how they work and what are the components. Now in this third part, we are going to discuss about the concept of decision tree approach in capital budgeting. What is the concept? Decision tree approach in capital budgeting. I have selected two problems from the old questions which are also there in the new study material. Two questions I selected. Okay, one question is there in the study material and also in the past exam. One question I have grabbed from a foreign author which is also there in one of the old RTPs when capital budgeting is there at that time in the past. So one question from the study mat and past exams question, and one question will be taken from a foreign author book. That foreign author question a very interesting and important question for the discussion part. Okay, first let us first understand the insights with regard to what is this concept of decision tree and how come people used to take decisions using this decision tree approach. Let me explain. Okay, see here. So you can see here, I have taken one question. This question as it is you can find in the study material as well. But I removed all the other unnecessary stuff. What is required for our understanding, that part only I am going to insert now. Okay, see here first. Point number one. There is a question that was given saying that there is a company which wanted to invest 40,000 rupees. Okay, which wanted to invest 40,000 rupees on a project. Life is expected to have 2 years. Salvage value 0. So no expected salvage value at the end of the period. Probability and the cash flows. Probability and the cash flows. Okay. Whenever in the question probabilities are given, what is given? Probabilities are given. You can solve that particular question in two ways. You can solve that question in how many ways, sir? Two ways. Way number one, probability with risk calculation. Probability with risk calculation. What do you mean probability with risk? Exactly portfolio management type. Okay. They will give you three different scenarios. Scenario good, bad and worst. Three scenarios they will give. Probability will be there 0.5, 0.3, 0.2, like that they will give. Probabilities also they will give. In this probability, cash flows also they will give. If the economy is doing good, my project also will do good. Okay, this is correct analysis. Do you know why? Automobile sector and real estate sector will be there. When the economy is in recession, they will not flourish. Okay, that means technically to understand the behavior of the particular market, real estate, automobile, gold business, all these things in general will work only when there is a prosperity in the country. Country A is crying means why they will buy real estate properties and automobiles? So they will not. So the concept is cash flows. Say for example 10 lakh. Okay, 10 lakh. And next one 6 lakh, 3 lakh. They will give like this. Okay. Now 10 lakh can be taken as a cash flow of that particular project. No, there is a probability of 0.5. 6 lakh is pakka? No, there is a probability of 0.3. For 3 lakhs is pakka? No, there is a probability of 0.2. We will multiply and then we will calculate weighted average cash flow. Weighted average cash flow, also called as probability into cash flow. We will call this X na probability into X. You will multiply. You will get 5 lakh, 1.8 lakh, 0.6 lakh. Okay, you will total. This is the weighted average return. This is the weighted average return or weighted average cash flow. This will have this particular a number what you get here will be having, see here, 5 plus 1.8. 5 plus 1.8, 6.8. 6.8 plus 6, 7.4 lakh. That means it's not 10 lakh, it's not 6 lakh, it's not 3 lakh. Weighted average return of this particular project is 7.4 lakh. Okay, this is guarantee. Yeah? There is a deviation. So we will calculate x minus x bar, sigma p into x minus x bar. We will calculate standard deviation and then we will tell what is the risk in this project. This all is also there in your syllabus. We will discuss about that much later. Easy area, because portfolio theories you will already do that. So the problem comes with when the question comes on probability, but the institute don't ask us to calculate using the probabilities. Rather, they will ask us to calculate, assign these probabilities for various nodes. Assign these probabilities for various nodes on the basis of possibility. Sir, I didn't understand your 2 words. Listen. What they will ask is how a project will NPV will look like if the cash flows returns are based on various events. Okay. Sir, I didn't understand even now. Sir, I will give you one good example. You can understand. Okay. See here. In this, what you have done, I didn't do anything actually. 3 situations we have taken. Economy is in good, economy bad, economy worst. If the economy is good, I will get 10 lakhs, or else 6, or else worst is 3. This is a situation. We just calculated the risk if these happen. I don't want this one. If economy is like this, what will be your NPV? Weighted average, you are telling, nah, I don't want weighted average. I want exactly various scenarios that can happen. Okay. If economy is good, something will happen. If economy is bad, something will happen. You are telling on an average basis here. On that average, you are calculating standard deviation and telling that there is a risk in this average. No, I don't want like that. I want exact figures. Okay. As per our estimate, 10 lakhs you said, na? 10 lakhs may happen, may not happen. Therefore, I want in that way. If it happens, how my NPV will be. If it doesn't happen, how my NPV will be. I want event-based probability analysis. Okay. So more on this I want to learn. One problem I have to tell you. After that, you will get a full clarity about how these questions will be tested. Okay. So rather than discussing on a theoretical grounds, we can go into one practical question and try to understand it. Okay. Let's see. There is a company. That company wanted to start a project. Investment happens to be 40,000. And life of that project is estimated to be 2 years with no salvage value at the end of second year. Probability and the cash flows. Cash flow in the year 1, it can be 25,000, it can be 30,000. That's the meaning of this 25,000 and this 30,000. Cash flow can be either 25,000 or cash flow can be either 30,000. In the year 1, if cash flow happens to be 25,000, then year 2, any of these 3 can happen. In the year 1, if cash flow is 30,000, in the year 2, these are the probable cash flows. When I say year 1, already happened, yet to happen. Future, present, future. Doubtful, guaranteed, doubtful. Therefore, year 1, 2 things can happen. It may be 25, it may be 30. Probability of occurrence of 25 is 40%, 0.4. Probability of occurrence of 30,000 is 0.6, 60%. Okay. So, if this happens, then these are the probabilities. If this happens, these are the probabilities. For this, you can't do problem in this route. Okay. You have to take a decision tree. You have to take what's a decision tree. Okay. Because situationally 2-3 events are happening. If this happens, how my NPV? Okay. I don't want average. I don't want what's a average. I don't want average. 0.4, 0.61. Okay. Next year, coming year. Okay. Second year, Probability of 12,000 is 0.2. Probability of 20,000 is 0.4. Like this, you should not compare. Year 1, either this can happen, either this can happen. Year 2, if this happens in year 1, first year only compare between these two. Second year, don't compare this and this. Probability total will not be 1. Do you know why? That's what we are going to discuss now. That means year 2, two things can happen. Year 2, three things can happen. Either it can be 12,000, either it can be 16,000, either it can be 22,000. If it is 30,000, either it can be 20, either it can be 25, either it can be 30. Okay. So if this happens, then these three will be considered. If this happen, then these three will be considered. Okay. First, these two are one independent events, year 1. These three are two independent events. Okay. How to understand this? We are going to discuss now. No doubt, sir. Year 1, these two total is 1. But year 2, these two total. None of them are total into 1. Why? This answer also you should know or not. That only we are going to discuss everything now. Okay. So listen carefully. How to understand this question first. This is there in your study material also. You can go and search. Okay. But explanation was not given by the institute. Now I am making an attempt to give you a perfect explanation as to how this problem has to be solved. Okay. Year 1. If 25,000 happens in year 1. Okay. Let us say this is estimate 1, this is estimate 2. Okay. Year 1, estimate 1 happened. What does it mean? In year 2 also chances of estimate 1 is more. So if this happens, then this will occur. If this happens, this will occur. When I say if this will happen, first this itself is doubtful. Therefore, at various levels, we have to understand. I don't want average answers now. I want, if this happens along with this, what will happen? If this happens along with this, what will happen? If this happens along with this, what will happen? If this happens along with this, what will happen? If this happens along with this, what will happen? If this happens along with this, what will happen? We are going to see each and every independent scenario. Clear, everyone? That's what the objective of a decision tree. Decision tree will not give you average answer. Decision tree will give you a perfect event based answer. Okay. So hopefully I think students understood what I meant to say. Right? So one last time I am repeating the objective of this question. Let us solve. And then you will get a clarity. Okay. No one, exclusive, I am telling you especially no one listening to the lecture should open my notes. Let us do together and solve this. Once after doing for practice purposes, you go to my Telegram channel, notes is ready. You can just see and complete. But while trying, please don't see the answers. You have to try on your own. Okay. So the first one, if 25,000 happens in the first year, year 2, 3 cash flows won't come. Year 2, 3 things can happen. There is a probability assigned to that. Okay. Now you get a doubt, sir. Whenever I say probability should total to 1. Okay. Year 1, 40. This is a probability. Year 2, 12,000 will happen, or 16,000 will happen, or 22,000 will happen. Anything can happen. Am I clear? Any of the 3 things can happen. Sorry, sir. These 2 happens, then probability is coming to 0.6, sir. Total of probability should be always equal to 1. That's what we are going to discuss now. Why probability do not total to 1 is a question here. First you should answer yourself. Why it is not equal to 1? These 2 totals 1. Sorry, these 2 totals are 1. Let us total the remaining. Then 0.2, 0.4 is not becoming 1. 0.3, 0.5 is not becoming 1. Are you understanding? So realistically, if you see 0.6 to 0.4 is becoming 1. But 0.6 to 0.5 become 1.1. So, how to understand probabilities given in this question is always a challenge. Okay. So, I said in lot of my classes I used to tell, again I am telling, we focus on conceptual clarity, not on mugging up some bunch of formulae. We are not fools. Okay. First, we should understand how to apply the concept on the questions given. So clarity of thought should be there while doing capital budgeting. Let us see what it is. First, investment, how much? 40,000. Life is how many years? 2 years. Salvage value with 0 and probable cash flows are given. Discount rate stands at 10%. First question. What are the two things that can happen in year 1? That can happen. First year, cash flow can be 25,000. First year, cash flow can be 30,000. If first year cash flow is 25,000, then in the second year, on the basis of the experience of first year, we are expecting 3 events to happen. Let us say if economy is bad, 12,000 I will get. If economy is good, 16,000 I will get. If economy is best, 22,000 I will get. But all these things will surely happen? No. There is a probability assigned to them. Those are the probabilities given here. Okay. So let us see how to understand. Okay. See. Let me take my calculator. I will also solve along with you. Let us do. Keep the heading. Step 1. Please solve along with me. Roughly only you solve, but solve. Everyone listening to the YouTube lecture, show some respect on the faculty teaching on the other side. Okay. When I ask you to do along with me, I mean it to say, because once you do and solve on your own, on your own also you need not solve. Once we solve on a flow, you will automatically fine tune to the understanding of concept. Seeing is different, understanding is different, but practically coming onto the floor and doing the question is different. So please solve along with me. Step 1. Calculation of estimate 1 cash flows under various scenarios. Estimate 1 cash flows under various scenarios. Okay. Calculation of estimate 1 cash flows under various scenarios. So what is this? We will call this as estimate 1. In this, how many events can happen? 3 situations will come. Year 1 la 25,000, year 2 la 12. Year 1 la 25, year 2 la 16. Year 1 la 25, year 2 la 22. 3 events of the project totally. Okay. Right on. Event 1. Year 1 la 25,000. Year 2 la 12,000. Year 1 la 25. Year 2 la 12,000. These are the 2 events that can happen. Probability assignment we will do later. First let us do the answer. Year, cash flow, PV at the rate of 10%, PVCF. Please solve along with me. Year 1, year 2. Year 1 la 25,000 can happen. Year 2 la 12,000 can happen. Okay, 12,000 can happen. Definitely answer is utter flop. Means what? Project is a negative NPV cash flow. Do you know why? Conversion into present value, keep it away. So future total 37,000, project cost is 40. NPV will be negative. Sir, okay, let's do formally. 0.909, 0.826. 25,000 into 0.909, 22,725, 0.826 into 12,000, 9912. Tell me what is the discounted cash inflow? $32,637. What is the disco? Means discounted outflow? 40,000. What is my NPV? Negative 7363. Positive or negative? Negative. Negative 7363. What is 7363? This is the negative NPV of project if first year 25,000 and second year 12,000 comes. So probability assignment. Don't get excited. We are just doing estimates cash flow. Probability we will assign later. Okay. This is the event 1. Write down. Event 2. Year 1 will not change. 25,000. Year 2, what is the number? 16,000. Year 2, 16,000. So year 1, 25,000. Year 2, 16,000. These are the estimates for which year? 2 years in event 2 occurrence. Okay. Now, you can do this in 2 ways. You can do this in how many ways, sir? 2 ways. Number 1, again you have to do this entire procedure. First year 25, second year 16,000. Again you have to calculate and you will do NPV. That is one way. There is another easy way to do. Do you know what is that? First year anyway 22,725 is same. It will not change. Second year it is 16,000 instead of 12,000. Means you need to apply this discounting factor only for that additional 4,000 balance. Therefore, write down. NPV of event 1 plus additional value in year 2. Okay. Additional value is how much? 4,000 into 0.826. This will increase. 4,000 into 0.826. How much? 3304. You add and write down. So 7363 negative minus 3304 is positive. 4059 is the NPV if first year is 25,000 and second year is 16,000. Next, event 3. Year 1 la 25,000. Year 2 la it is 22,000. So what will happen now? NPV of event 1 4059 negative plus additional value of year 2. Tell me now. 16,000 and 22,000, what is the difference? 6,000. 6,000 into 0.826. 4956. This is negative, this is positive. So NPV finally became positive. 897. This is a positive figure. First of all, hope everyone in the class listening now understood how these numbers have come first. Okay. So we are taking NPV of event 1, adding the difference in value of 2. Or no sir, I won't want to do like this. Then you know how to do. First to 25, next to 16. First to 25, next to 22. Like that again you have to do this entire procedure. Unnecessary time waste. I am showing you easy method of doing the answer. Okay. So additional value of year 2 you will take and you will do. So this is the first scenario. Hope everyone understood. Now, if discounting factor you take 4 digits. 0.9091, 8264 like that if you take, small difference will be there in your answer. It will look like this. 7355, yeah? We got 7363 because 4 digits were taken. 4048, we got 909. I got 897. Almost 900 we got, then 909. Why? Because 4 digits were taken. Anything is right answer only. Generally, institute follow 3 digits. Generally, they follow 3 digits. Normally, I have done for 4, but institute follow 3 digits answers only. So, this is more correct. So, 897. Up to here, everyone understood? Okay. Next, step 2. Please complete this in the video itself directly. Write down calculation of, write down the same, estimate 2. Now, event 1. Year 1, 30, year 2, 20. First we have to do year, cash flow, PV at the rate of 10%, PVCF. year 1, year 2, 30,000, 20,000, 0.909, 0.826, 27,270, 16,520, 43,790. This is a discounted cash inflow minus 3,790 is the positive NPV. You can also see here, just a small difference will be there. I got 3,801. Okay, you got 3,790, 20 rupees difference. That too because of what? 4 digits, 3 digits. Okay, next, fast. Let us do now. Event 2. Year 1, 30,000. Year 2, 25,000. Year 2, 25,000. Okay, now see here. NPV of year 1 plus additional value of year 2. Additional value of year 2. Previously year 1 value, year 2 value is 20. Now increase to 25. Means I need to add the extra 5,000 into 0.826. $7,920. Here if you observe, it is 7,933. Small difference. Next. Event 3. Year 2, 30. Okay. Let's do. NPV of year 1. Sorry, year 2. NPV of, year 1. 7,920 of this particular event 2. So event 2 NPV is how much? 7,920 plus additional value for year 2. How much again? 4,130. Reason? Again 25,000 to 30,000 means again additional 5,000. 7,920 plus 4,130. 12,050. How much they got here? 12,065. Small changes. Okay. So we are now having 6 numbers which are added with respect to events. If first year 25,000, second year 12,000 comes. If first year 25, second year 12,000 happens, our NPV is negative. If first year is 25 and second year 16, again NPV negative. If first year 25 and second year 22, slowly it became positive. In this second event, 30-20, 30-25, 30-30, all have given positive NPVs to the project. Now, all these will happen, any one event can happen. First year one event will happen, second year one event will happen. Totally for the life of the project, 2 events will happen, but all with some probability. Now we have to draw a decision tree. What we have to draw? Decision tree. Rules to draw the decision tree. Small rules are there. Let us understand. See here. This you need not write. See here. Square box is a decision node. Square box is a decision node. Means what? Whether to do, not to do. Decision will be taken there. Okay. Event decision taken. What will be the chance that can happen? That is circled. Okay. Circle gives the chances. Square square will give you decision. Okay. Circle give you chances. Square will give you decision. Shall we continue? Okay. So how it look like? Don't see the answers. So I will show you how it look like. See there. This is how it will look. Clear everyone? So this is the point. Okay. Let us see. See here. First, decide. Take the project, not to take the project. అసలు ఫస్ట్ లోనే we decided not to take the project. Question not there. Answer over. 1 mark also you don't get. But if you take the decision, now 2 situations can happen. How many? 2 situations will happen. What are the 2 situations that can happen? Year 1 cash flow will be 25 something. What is it? Year 1 cash flow will be 25,000. Year 2 cash flow may be 12,000, 16,000, 22,000. Okay, see here. Shall we? Now let us see. See here. How the notes should look like. I am showing you one more time. This is how the note should be. Invest, not to invest. Like that you should understand. Okay. Take up, not to take up. If you take up, I will do one thing. Let us take a little space from the middle of the page. Exam also, you should adjust accordingly. I decided to take up. Now 2 chances. First, 2 things can happen. I may get 25,000. I may get 30,000. This is for year 1. I may get 25,000. I may get 30,000. What is the probability of getting 25,000? 0.4. Probability of getting 30,000? 0.6. 0.4. 0.6. Okay. So 25,000 probability 40%. 30,000 probability will be 60%. Okay. This is the first thing to understand. Next, if 25,000 happens in the first year, furthermore, 3 chances are there. If 30,000 happens, furthermore, 3 chances are there. If it happens as 25,000, there are 3 chances. Number 1 chance. Sorry. Question. I want question, not the answer. Here is the question. 12, 16, 22. It can be 12,000. It can be 16,000. It can be 22,000. Or it can be, what is this? 20, 25, 30. It can be 20,000. It can be 25,000. It can be 30,000. What is the probability of occurrence of 12,000, 16,000, 22? 235. 0.2, 0.3, 0.5. 451. 0.4, 0.5, 0.1. These are the assigned probability. Okay. Now the story starts. See here. What we have done is, we have drawn a decision tree. See here. We have drawn a decision tree. Up to here we have drawn now. Okay. Now we need to see the respective NPVs and apply them. Okay. First you should tell me, I should write NPV at various notes. First year, if it is 25, second year, it might become 12,000. That is 1 chance applicable. Okay. Now tell me. Now the NPV, already we calculated for that or not? Event 1 NPV you need to write here. Minus 7363. Minus 7363. Second event. First year 25, second year 16. First year 25, second year 16. Minus 4059. Third event. First year 25, second year 22. Plus 897. Plus 897. Next. 30,000 and 20,000. 30,000 and 20,000. 3790. 30,000 and 25,000. 7920. 30,000 with 30,000. 12,050. Plus and minus separately you have to write. Okay. This is the amount. Now the probability. This is what is important. First year can be 25 or 30. Second year can be 25, first year can be 25 or can be 30. If first year is 25, second year can be 12,000, 16,000, 22,000. Okay. See here, question the probability total 1 will be given for these. But when any two events if you take, it will not be 1. Do you know why? These are not cumulative probabilities. These are called as joint probability. First clarity number 1 for everyone listening to the class. These are not your mathematical normal probabilities. These are joint probability. I will give you one example first. After that we will go. I take a die. I will roll it. I asked what is the probability of occurrence of 6 on that die. Okay. A person said, sir, it is 1/6. Very good. I said I will take another die. I will roll it. What is the probability of appearance of 6 on that die? Again he said, sir, 1/6. Now I ask third question. I will roll both of them together. What is the probability of occurrence of 6 either on the first die or on the second die? Then what you will tell? Okay, so 6 can come either on this or on this. Okay, sir, I will take one die. I will roll the die. I will take a die. I will roll the die. When I roll the die, automatically what will happen? I will take a die and I will roll it. Okay, appearance of 6 means what? 6 dots, 6 chances, any one thing can happen. I took 2 dice and rolled it. Okay, I took 2 dice and rolled it. Once I roll the 2 dice, appearance of 6 on any of them becomes more probable. Do you know why? One die 6 heads, 6 faces are there. Any one face should be appearing now. That is 6. I took 2 dice. Now chances are more because there are 12 faces. 2 times 6 can appear now. Are you understanding or not? Therefore, probability will be more. So what I will tell, I wanted to get 6 either on this or 6 either on this. Means chance of occurrence of 6 is increasing now. Therefore, what we will tell, 1/6 is the probability of occurrence of 6 on one die. 1/6 is the chance of occurrence of 6 on another die. You are telling either on this or on this, not on both. Anyway, 6 should come. Then the probability will increase. Occurrence chances are increasing. Therefore, 1/6 plus 1/6. Okay, 1/6 plus 1/6. Listening everyone? 1/6 plus 1/6. So technically this will be 2/6, which will be 1/3. Or 1/6 means 16%. Another 1/6 means again 60%, 16%. 16% plus 16% will become 32.3667%, which is 33%. Also can be written as 1/3. So chance is increasing. In every 3 rolls, 6 can come now. Previously, in every 6 rolls, 6 can come once. Okay, probability increase. Now this is or and or. Whenever or gate is used in probability in math, we will add. I said this way. I will take 2 dice. I will roll them. What is the probability of occurrence of 6 on the first die, and 6 on the second die? Probability is reducing now because I should find 6 on both of them. Okay, 6 on both of them. Then the probability will be 1/6 into 1/6, which becomes 1/36. Are you understanding or not? Which becomes 1/36. So hopefully you can understand what I try to tell. So the situations are so worse now. Occurrence chance will be more. Occurrence chance will be less. Please see the adjustments that I have given. Just take a minute time. Okay, understood the concept? So whenever or is used, addition. Whenever and is used, multiplication. Okay. Now, come to the question now. Apply the same logic. I should get 25,000 in the first year. Okay, 25,000 in the first year and 12,000 in the second year. Okay, this is one event. Or 25,000 in the first year, 16,000 in the second year. Okay, independently what can happen is or, but when you take any two events in particular, always both should happen together. That's why totals will not be equal to 1. Always listen, whenever or is used, these are called as cumulative probability. What probability? Cumulative probability. These are called as joint probabilities. These are called as what probability? Joint. Total of all the joint probability should be equal to 1. But total of cumulative probability may not be equal to 1. Okay, cumulative probability may not be equal to 1. Logic we can understand in the second problem also. First, let us understand this. First year, how much? 25,000. First year, how much? 25,000. End second year, 12,000. This is the NPV. This NPV is true if 25,000 comes in the first year and 12,000 comes in the second year. End means both should happen. Anyone should happen. Both should happen. Multiply and multiply. So 0.4 into 0.2. Likewise, 0.4 into 0.3. 0.4 into 0.5. Same. First year la 30,000 and second year la 20. Again joint. 0.6 into 0.4. Okay. Next. 0.6 into 0.5. 0.6 into 0.1. Total all these now. All joint probabilities total. 0.08 plus, 0.12 plus, 0.2 plus, 0.24 plus, 0.3 plus, 0.06. Exactly it's equal to 1. That's why always in maths, joint probability totals will be equal to 1. Cumulative probability totals may not be equal to 1. It will be more also. Okay. That's why probability, if you do the discounted payback, probability 0.1, 0.3, 0.2, if they give like this, okay, what you will do? 0.1 plus 0.4, like that you will total. Okay, their probabilities will not be given. There they will give another number, but I am telling you, whenever cumulative probabilities are given, totals need not be 1. Joint probability totals will be always be counted to 1. Okay, now tell me, this particular NPV guaranteed a probable. Apply the probability. 7363 into 0.08 minus 589.04. 4059 into 0.12 minus 487.08. 897 into 0.2. 179.4 positive. 3790 into 0.24 plus 909.60. 7920 into 0.3 plus 2376. 12,050 into 0.06 plus 723 total. Minus 589. Okay. Minus 589. Minus 589.04 minus 487.08 plus 179.4 plus 909.6 plus 2376 plus 723. Okay. 3111 we got, 3111 we got, just 13 rupees difference. We got 3124. Okay. NPV of worst outcome 7355 with 8% probability. NPV of best outcome 12,065 with probability of 6. Project will be accepted, not accepted? Accepted. Because NPV is positive. This is how we need to do. This is a question of one type. Okay. One type question is asked in this way. Okay. One type question is asked in this way. There is another worst case scenario question that can come in exam on decision trees. That will be problem number 2, will be discussed in the next lecture. Okay. Next lecture we are going to discuss about extra problem taken from a foreign author. CMA US booklet is there. Exact copy I found in one of the old RTPs of the ICAI. Okay. Worst case scenario like this question can come. I am telling you very clearly. If this question comes in a clean bold, you can't even understand what is happening. Shall I tell you why? See the solution. I have given full analysis, full notes I have given on this, how to understand this basic decision tree, probability applied decision tree. After that, final decision tree. This will be the answer. Worst case scenario question here. 10 marks or 12 marks question will come from this. Question is very, very small. See. That's all. Question is over. That's all. Just he is asking, take a decision whether to drill or not to drill. Okay. This is the question. Okay. On this, we are going to solve the problem. So that will take around 1.5 hours to solve. Live learning, I will come and solve this particular question. But every one of you, please practice the first question and get ready for the second question. Okay. Put in the comments, are you ready for the second session or not? Once you are ready, we will start with the second type of decision tree. Okay. Please share this video to your friends as well. Okay. I am putting this on YouTube and as well as on the Google Drive for the EOB and regular batch. Capital budgeting, no change between EOB and regular because it's a newly added chapter. I am putting the same lecture for everyone and it is open also for the students who are not taking the classes also. No issue. Just get through the chapter, advanced capital budgeting. All the very best. Put in the comments, did you understand this and are you ready for the second lecture as well? Okay. Thank you very much.